We're gonna get started now. Welcome everyone to Ktown Startups, New York City. We are hosting this event in conjunction with KOLABS, Strong VC, BAM Ventures, and KSE, Korean Startups and Entrepreneurs. Really want to welcome our speakers. We did have a change in the hitting lineup, unfortunately due to other obligations, but we do still have some amazing people up here that hopefully share their deepest, darkest secrets with us throughout the rest of the 35 minutes. And we're going to keep this light and easy. Everyone's really close and friendly here, so we're going to try to keep the conversation moving and then open it up toward the end with Q&A so that you can prepare your questions for the next 35 or so minutes. But before we get started, I'd like to pass the mic down so that everyone can briefly introduce themselves.
Sure. My name is Nahm, and I'm with Strong Ventures. And we're a seed fund that primarily invests in Korean entrepreneurs in Korea. And also, we're trying to increase our involvement in the Korean American space. And we focus in supporting in Korean American founders and startups as well, both in California, and hopefully we'll increase our activity here in New York as well.
Hi, I'm Bong. I'm losing my voice, so I apologize in advance. I run a fund called KohFounders. We do angel to pre-seed to seed. Started 4 companies myself, 3 okay ones, 1 bad one, and then was also a VC in Palate.
Hi, my name is Richard Jun. I'm with BAM Ventures. It's a fund that I started with Brian Lee about 2 years ago. We do a lot of seed stage investing out of Los Angeles. Currently, we have about 80 companies in our portfolio. Our backgrounds are mainly in starting companies. A couple of the companies that my partner has created, his first one was LegalZoom. I'm sure a lot of you have started your companies using their forms. Our second company was ShoeDazzle with Kim Kardashian, which we sold at the end of 2013 to our largest competitor. And our latest company, well, not our latest company, but our third big hit is the Honest Company with Jessica Alba. That's certainly the success of that has surpassed even our own expectations. In addition to doing a lot of the pre-seed investing, we also incubate companies. One company which we started that we're seeing a lot of lift off of is called Holler.com. It's essentially the 99-cent store, dice sell model that we've taken online. We launched it a couple months ago. We're already up to significant revenue and had, quite frankly, great investor interest out of Silicon Valley. I think in addition to our normal investing in incubating companies, John and I have a program that we run out of Koreatown called KOLABS. It's an incubator space that we co-manage where we try to advance our goals on a couple different fronts. One is to create a very collaborative, supportive environment for Korean American entrepreneurs to actually come in and start their businesses and provide active mentorship. We have an exchange program with the Korean government where they'll send over a lot of their promising startup companies, and we try to coach them up when they're over here. We'll also fly out to Korea and work with a lot of the incubators over there. So that's been extremely gratifying because we're starting to see companies that otherwise wouldn't have traction or access to the investors in Silicon Valley and Los Angeles that we're able to help with because we feel that the team is strong, technology is strong, language is a little bit of a barrier. There are cultural issues that we help them work through. So we feel like that's something we're going to continue on a larger scale, and hopefully it will start making more of an impact as we see more and more Korean companies cross over here into the US.
Hi everyone, and my name is Sang Lee. I'm the president of KSE here in New York. I'm also a startup founder of a fintech company called DarcMatter. So we're all friends here until we talk about investment. So let's talk about investment. So let's talk about some of the recent stuff that you've done, some of the recent companies that you've looked at, and any trends that you want to point out for startup founders that make it really worth your while to look at an investment opportunity.
Sure. So actually we are very Korea focused, and we believe in this Korea go global trend that's happening a lot. And it's not just because we have some patriotic sense and we love Korea, but there is ROI here. There is a lot of upside potential. And so a lot of the investments we've made are in companies that are taking something good from Korea and going global. I'll later mention one great example out of New York, which is Drama Fever. And actually, the co-founder and CEO is right there, Sok Park. And and I'll mention him later, but Sok and I, we grew up together in Spain, so we go back a long history. But what Drama Fever has done is taken Korean content and globalized it everywhere, and really made it something that is loved by the whole world. It's happening similarly in the Korean cosmetic space, and this past year we've made a lot of investments in food. So we think Korean food also has this huge global potential. And so we are invested in a company that we are sort of accelerating out of the co-working space that Rich mentioned, KOLABS, and it's called Rush Order. It's the biggest food delivery app in Koreatown, has all of the top Korean restaurants there. So anybody that lives in or in the proximity of Ktown, LA, is able to order Korean food and get the best dishes delivered to their door, and they manage their own delivery force. So it's been great to see their growth. The other startup that we're really excited about, and they're one of the sponsors of tonight, is Snack Fever, who is partnered with Lotte to provide the pepero. And it's a monthly subscription box that distributes Korean snacks to a global audience. So what's fascinating about them, and it's very similar, I was talking with Sok earlier today, that the demographics of Snack Fever is like almost 100% matching the Drama Fever demographics. So 97% of Snack Fever customers, and that's in the thousands, are non-Korean, and then and they all love Drama Fever. So when we do Facebook marketing, it's very easy. All we do is people who like Drama Fever, end of story. And so the Facebook marketing is working wonders, and so we are really excited because Korean people in the global audience watch Korean dramas in Drama Fever, and they see all the ramyeon and gogakon and pepero, and they're like, where can I get this? Snack Fever delivers it to your door. So we are very excited about all these Korea Go Global trends. Thank you.
All right, so I believe it was a three-part question. What are some of the recent investments? What are some of the trends you're seeing, and what are some of the sectors you like?
Bong pays attention to me. Thank you.
And so, by definition, I just rejoined the investment side about a year ago, launched this fund, and so all of my investments are relatively recently, and so made 17 investments the past little over a year, committed to an 18th one. I would say the most recent ones, here in New York, I have one called AgriList. It's an agricultural technology company. It's basically indoor farming management software and analytics. CEO, they actually won TechCrunch Disrupt, so that's pretty exciting. Another one I did here recently is called Wealth. It's basically capitalizing on sort of the trend in healthcare around Obamacare and pay for performance as opposed to pay for service. Did a fintech investment in San Francisco called Trim. The initial thesis is around helping you get rid of unwanted subscriptions, and then once they have your data, then being able to focus and target other sort of relevant financial sort of management tools. Well, okay, I invested in Lux. That's a Korean American entrepreneur, but that wasn't very recently. But Lux is doing very well. Some of you may have seen that they're, in TechCrunch last week or the week before, that they may or may not be raising a big round of funding right now in the 50 million range. So there you go. In terms of some of the trends I'm seeing. And so I would say a big trend, as you all know, in the past quarter or so, the market has changed dramatically. So as a result, it's becoming increasingly more difficult for entrepreneurs to raise funding. Valuations have come down significantly. None of that's, I think, news to any of you. As an investor, obviously that can help you if you have dry powder. Again, fortunate that I have one vehicle I raised a year ago and another one I just closed a few months ago. So, we're seeing a lot of interesting opportunities. In terms of sectors that I look at, pretty focused right now on a few different areas. Fintech, healthcare IT, agricultural technology, sort of some of the non-sexy businesses, if you will. That's about it.
I think a couple of trends that Bong alluded to, we should all heed. Certainly, we did this about 4 months ago, and it was, even 4 months ago, which seems like a very short period of time, the funding climate has completely changed. You're just not getting to the valuations that we once saw. Investors are much more interested in the path to profitability. And what I'm seeing is money move out of certain sectors where people see it as a swing for the fences type play, where you're raising huge amounts of money to drive marketing, to build a network, right? Those things investors don't really have an appetite for. I think they're now looking for more niche plays, companies that look fundamentally sound, hitting in an antiquated, undisrupted industry, and that's why you like healthcare. We don't really have a mandate. Clearly we support Korean American entrepreneurs, but we support all entrepreneurs. We've been blessed to really have had the good fortune of creating some amazing companies that have gone to huge valuations in relatively short period of time. So what that's taught me as an investor is I have pretty good benchmarks for what we like to see in an entrepreneur based off of all the great entrepreneurs who have helped us build our businesses. So we are pretty open mandate when it comes to where we place our money. A lot of it has to do with just the founder and the founding team, what their convictions are, why they created the business, whether they have the wherewithal to stick to it once they hit a road bump, and they will hit a road bump. One of the other things that we're doing to de-risk this environment, and I see a lot of other funds doing it as well, is everyone now wants to incubate an idea. It's just math. When you have your own idea and you're able to take a senior management team, wrap it into your idea, provide the initial seed capital, you just sit heavier on a cap table. You're able to control the destiny of a company where you're now playing for cash flow as opposed to a huge IPO exit or a merger that happens pretty infrequently. So we've done the work and analysis, and we know that most exits occur below the $40 million mark. So we look for companies that can achieve profitability, and it's at that point where we start making decisions about, okay, does this company have the potential to be the next honest company, or does this company have the potential to be something that does well for its investors as well as the co-founders. So real decisions are being made about the direction of the company that just weren't being made 2 years ago because everyone was prizing growth over sanity.
So I think, Rich, to kind of go off on that, I think one of the key considerations, even for me as a startup founder and for other startup founders as well, it's kind of how do you view the world as an investment opportunity, right? Like, what is the order of things in your mind that you consider before you really dive into like the ROI? Is it the market? Like, what order of things do you consider? Is it the founding team? Is it the market size? Is it path to market? Like what's the order of things that you consider first? And Bong as well. The only reason I'm skipping John is because he's gonna say, "Are you Korean?" So we're gonna
try to shield stack fever. So we're new as investors. So I think I'm turning into a better investor because I know what just doesn't work in the marketplace. So I don't know what's going to be great, and at seed, pre-seed, it's really hard to determine where your unicorns are going to come from, if that's even feasible. But once you have muscle memory over deal repetition, and you know, even today I took 5 live pitch meetings back to back to back to back to back, took a couple phone calls, and over time you start getting a better sense of what's out there. I mean, one of the big misnomers about entrepreneurs is they pitch to you and they believe they have a great idea. Chances are it's a good idea, but what you're not understanding is it's a good idea in the context of 10 to 12 other ideas that are equally as good, if not better than yours. So it's not a binary decision for investors. It's more, I have limited capital, limited bandwidth to invest in your company. Of these 15 or 20 that I see in any given week, of the 60 to 80 that I see in any given month, where do I feel like I can do right by the investor, and for my LPs, where do I want to invest my time and my resources? So ultimately, it comes down to that. And then one of the things you're always going to realize when you pitch is investors have biases, and whether it's sane or not, it's just people are prejudiced to like certain companies or they're not. So there are companies that I send to John and Bong all the time, and they'll shit on it all day long, right? But I don't take it personally because they'll send me companies and I don't like those companies as well, but you know, it's just how things are. So the lesson to you obviously is sometimes you just got to go through the cycle, constantly keep pitching. Hopefully it makes sense and you'll find that one investor that believes in your idea, because they're out there. It just takes a lot of work.
Yeah, I mean, I would agree with everything Rich said. I'd say in addition, I guess going back to sort of your question, in terms of what I specifically look for. So if you broadly break up kind of the investment universe, and this is gross generalization, but you know, it's like Sequoia, one of the oldest, most well-known firms. They tend to be sort of very market, sort of thesis-driven, and so that's probably much more towards where I skew. I've yet to be disproven. Kind of a, you know, market timing is sort of the most critical element. The reality is, at least from my perspective, A market, you know, B team, market wins. You know, B market, A team, market still wins. And so, you know, in general, I try to look at specific market opportunities, and I have to believe that it is a big enough opportunity with some level of competition, but not too much level of competition. That's kind of sort of the first thing I probably look at, and so a lot of stuff I filter out as a result. Once I've kind of identified different markets that I think are interesting, I want to sort of dive deeper into, I then look at teams. And so when I look at teams, I focus on a few sort of attributes exclusively. And so my background is, you know, I used to be a product guy, I used to be a developer, and so I'm very, very product focused. And just having cut my teeth in the Bay Area, I take a very product-centric approach. So I look for entrepreneurs who can push out product, who can iterate. I look for entrepreneurs who are very, very scrappy, and are willing to sort of, you know, at the earliest stages, you know, quote, sort of eat the ramen and mac and cheese. I look for mission-driven entrepreneurs as opposed to sort of mercenaries. I've yet to be disproven that at the earliest stages of a company, the difference between failure and success, assuming for the moment you're attacking an interesting market, is just persistence. It's, you know, everyone has, to Rich's point, everyone has a good idea. You know, in general, most of the pitches I take, I'd say 99% of I think I took 500 pitches last year, 99% were referred into me. So, you know, there is that kind of minimum sort of filter, if you will, like people like, you know, John and Rich and et cetera. And so, you know, what I've seen them most of the time is, you know, they're all smart, you all work hard. Again, you're probably attacking something interesting, and that sort of difference is how long are you willing to grind it to hit initial product market fit. And so, you know, from my perspective, those are sort of key attributes.
We'll allow you.
I would only echo everything, so I'm not going to speak long, but all of us are seed, pre-seed investors here, and so we get so involved at the early stage that there is not much to see in terms of traction. Yeah, in our case, I think we look at the team as the highest in that list, and because sort of borrowing from the good to great philosophy. We do believe that if you have a good team, you know, you can, even if you're right now going after a small market, things can shift as we talk, and we can point you to a bigger market. So yeah, team is the most important, for at least for us.
Since we have a lot of LA investors here, let's talk about some of the heavy hitting stuff. So you guys talk to both New York City entrepreneurs as well as LA entrepreneurs. What are some of we'll start with Rich. What are some of the key differences that you see on the bi-coastal cities?
Can I get a show of hands of who here is with a startup, and who here is pitching for money right now? Who here is pitching for a second round of money? Is this your initial seed? Okay, so you guys, okay. Who here are potential investors or angel investors? And then I guess everyone else is here for the free food, right? There really isn't a difference, except for the fact that each geography has its own natural tendencies. I think people, you know, the Korean New York entrepreneur is as different as the Korean LA entrepreneur. Similarly, like the New York entrepreneur is different from the LA entrepreneur, right? The types of companies I see here, or that I'm more inclined to believe can become great, are the ones that are more fintech based, something that touches on Madison Avenue because of the proximity to obviously Wall Street, as well as some of the largest media buyers and advertising agencies in the world. In LA, you're looking at companies that have more cross-market appeal. It really is a much better cross-section of you know, your potential audience, right? In LA, I think there's it's less homogenous than it is here in LA. I mean, here in New York. So as a result, I think consumer companies have a much better chance of understanding product market fit earlier, initial consumer traction. They're able to quickly test what's going to work on the you know, performance marketing side versus coming here where it's a self-contained community. I think from the standpoint that this seems like a closed ecosystem with a very strong personality, it's very similar to San Francisco. Like if I have a company that's very consumer facing, more for a mass audience, if I see test results from, you know, performance numbers from testing it in Palo Alto or San Francisco, it's just a false read, right? Like that is a completely different bubble of consumers there, so you can't really get a sense of how it's going to port mass market. So, you know, in short, just cycling it back, I think baseline, all entrepreneurs are the same. They have vision, they have passion, they want to execute against the idea, they want to prove to the world that they're right and the world is wrong. That's the common DNA in all entrepreneur. You guys in New York are a little bit more, you speak more from the experience of Madison Avenue and Wall Street, and in LA I think it's a little bit wider open.
So I think we all heard that New York entrepreneurs are better, okay? I think we got that conclusion. But I think, you know, I'm going to get a new question for Bong and John in terms of tying back to what you were saying, what Rich was saying about new founders, and then we were talking about the funding climate, and we talked about a bunch of stuff. And I think the free food crowd, there may be a lot of new entrepreneurs who want to start companies. So in the current environment, like, do you have any recommendations for very early, like, idea stage companies? Do they need more traction than they used to? Should you push off raising funding, or should you try to get some right now, or, you know, any kind of advice that you might provide?
Yeah, sure. And so from my perspective, again, I invest at the earliest stages of the company, and so one of the things I did not say is kind of a key criteria for me is traction. Having said that, obviously traction trumps all. So if you have great traction, it will be easier to raise money, just period. But again, given I will write a check based on a PowerPoint presentation or a cool MVP, by definition, then I'm not digging too deeply in traction. You know, so, I mean, yes, every metric that you can look for is going to be higher now in this market. But that's not to say guys aren't, or gals aren't still doing deals. I think, you know, everyone I know, that's kind of the angel, friends and family, pre-seed, seed, who's kind of a, whether it's a sophisticated angel or institutional investor, they're still deploying. You know, frankly, from my perspective, it's actually a great time to be an investor. But it's also, I would say, as equally, if not a better time to be an entrepreneur. Because yes, you know, when the market's frothy and valuations are higher and it's easier to raise money, you can raise money more quickly. But the reality is, so can all of your competitors. It's much more difficult to fight for you know, recruits. It's much more difficult to get mind share. It's much more difficult to get sustainable traction in sort of frothy markets. And so if you actually look historically, a lot of the great companies are actually started in sort of the bottom of the market. And so from my perspective, again, you know, notwithstanding the fact that I just closed, like I said, a couple of funds in the past year, I actually think this would be a great time. Like I would very much like to start another company.
So just to prove I do listen to the questions, I'm going to try and answer the last two questions with one response. So, I mean, and New York is somewhat to an extent similar but more mature than the LA market. And actually all of us, even though we live in LA, we have roots and ties here to New York. Rich and I went to school here, our families, well, at least I have my parents and a lot of ties here in New York. So we love New York. What you guys have here is that the market for VC and founders is a bit more mature than LA. So LA, for example, there's a lot of seed funds in LA. I think at least 30, 40 of them just in LA. But we don't have Series A VCs. We only have Upfront there and Greycroft, pretty much. Here in New York, you have Union Square Ventures, Barron Ventures, RRE Ventures, and Bessemer Ventures, and so on. So the options for Series A are much wider here in New York, and let's not even talk about Silicon Valley. So in New York, a lot of our in LA, a lot of our entrepreneurs, just because of the lack of or lower access to Series A investors, they have to learn to be cockroaches early on, because there's a big chance you might not get the Series A fast enough. So a lot of LA startups actually become profitable with seed funding only. And because they know that there is a good chance that nobody from Silicon Valley is going to call on them. And Upfront is just too busy just chasing the sexy deals. And by the way, we're good friends with Upfront, okay? I'm just speaking of reality.
Off the record.
Yeah, and yeah, Mark Suster is an advisor to our fund. So I think that forces our founders to behave like cockroaches early on, and that one sort of goes in the philosophy of Korean entrepreneurs too, just by the nature of us being immigrant entrepreneurs. Our parents came with nothing and started off all these stores and learned to survive with not much. So that spirit carries on to the Korean American entrepreneur. And I think that spirit is what's necessary to endure this tough times, because every VC and all the industry people are saying, you have to learn to be profitable early on. Don't depend on the next Fidelity fund to invest in you $1 billion to spend it all in marketing. So I think the lesson from today's market is learn to be cockroaches early on, instead of unicorns.
So I mean, I think there's like kind of a general theme for startup founders now, right? Like, it's the difficulty of the market doesn't just pervade into startups. I mean, even the investors are kind of facing pressure. So that's going to be something that startup founders have to deal with for the foreseeable future at the very least, right? But let's talk about some fun stuff, because this was really depressing. So let's talk about the fastest investment decision you've ever made. What was it? You don't have to talk about the company. You can just say why you did it, and what about it made you make that kind of decision?
So, funnily enough, the two fastest decisions I've ever made were actually both Korean American entrepreneurs. So that worked out well. There you go. So the first one was Lux Valet. So I've known Curtis Lee for years. We used to work together at ATV, venture firm in Palo Alto, and just we've been buddies for a while. We've done stuff together for years. He's just fantastic reputation. Just he ran product for I think Groupon, for Zynga, senior YouTube guy. I think eBay guy, and so, it was one of those when he said, "Hey, Bong, I'm starting a company. I'm teaming up with I think it was the CTO or VP of engineering at Zynga and the first employee at Lyft, and we're going to do like an on-demand car play." I was like, "I'm in." That was literally it. We had a 5-minute conversation. I said, "Whatever allocation you can give me, I'll take it." But unfortunately, there were 50 other guys who did the same thing, and so my allocation ended up being very small. The other one, I'm the first to admit I'm completely biased here, is when my brother started a company in the healthcare IT space. I'm fortunate that I have two brothers in tech. One's actually based here in New York. He's one of the managing partners of a fund here called Venrock on the healthcare side. But then my other brother was a sort of repeat entrepreneur, and so he had done one in the Bay Area. He was like the first employee at Video Egg, which became Say Media. He left and we started a company together. Sadly, that was the one of the 4 that I started that did not have an exit. But then once he teamed up with another guy I knew who was like a repeat serial guy, like a Stanford YC kid doing something pretty innovative in healthcare IT, I said, again, I'll write a check on the spot. I'll take whatever allocation. And again, same thing. There were a bunch of guys who said, the same thing. And so, I got a very small allocation as well.
Let's see.
So many.
We tend to make really quick decisions. Our fund is relatively informal. There are 2 GPs, me and Brian. Since we've been working with each other for a very long time, there's a shorthand. We know what we like, we don't like. So what we've really, where we make quick decisions are guys who have really been through the just kind of the battle of starting a company where they've tried something and it hasn't been a huge success for them, so they want another chance at reclaiming their reputation or another go at proving that they can build something great. So we love second-time entrepreneurs. We love guys who have tried to build large companies and have failed and have taken those learnings to really attack the space again. I think the quickest decision we made, and it was almost a non-decision again, was Holler.com, which was an idea that we were kind of tossing around. We had our head of marketing over at Honest Company, who is a Korean gentleman, Dave Yom. He's our friend, trusted, really smart at what he does. Plucked him out of Honest Company to be the CEO of Holler.com, really filled out the team, was the first check-in, and now that company's off to the races. So I think just as a learning tool for a lot of the entrepreneurs here, if you're a first-time entrepreneur, it probably makes sense to go to your trusted friends, because ultimately they're investing in you and less on the idea. And how I would stage the investment is actually to take a little bit, show minimal traction, then raise a larger amount. I'm deviating a little bit from the topic here, but again, I see way too many companies that raise $300,000 to $700,000, which just isn't enough gunpowder to really drive anything. So they get stuck, and that's real money for someone who invested in your company. So I'm a huge advocate of going lean and mean, being a cockroach. Damon John wrote a great book called The Power of Being Broke, or Power of Broke, and then showing some success off that and raising a larger round to give your company a chance to be something great. When you play in the middle, you get stuck, and I'm starting to see that now more than ever, where we have companies, even in our portfolio, where it's hard for them to do the next round because they just took enough to keep the lights on and just kind of go sideways, but they didn't have enough capital to bring in the team or to to spark up on that big idea, which drives the real growth that allows for the next round of investors to get excited about putting money into your company.
I think Rich set me up pretty nicely for my next question, because I think the best learnings obviously come from the things that don't quite work out as well as you'd like. So on the investment side, I'd also like to get that perspective. What was potentially the most disappointing slash bad, I don't want to call it bad, but disappointing slash bad investment that has been made, and what were the drivers for a potential failure? Because I think a lot of founders could learn from something like that.
So this was actually years ago, the first time I was an investor. When I was at ATV, that's where we were writing I think the average check size at ATV was $7 or $10 million bucks. And so we met a couple of entrepreneurs. We really liked them. We diligenced them out, and we ended up giving them, I think, $6 or $7 million bucks. Literally the day after we funded, the CTO and co-founder quit. That sucked. It was one of those where there was no indication that he would jump ship. We had done a ton of references on him. We actually had a bunch of people that we knew in common. It was just one of those. His co-founder, the CEO, had no idea. I guess his justification was, well, I'd rather see the company through to getting around the funding and then leave. Obviously, we didn't feel that way because it was a technical product. And so that was bad. Fortunately, the CEO said, hey, that this isn't right. And we were able to actually sort of restructure the investment, but ended up, we lost a bunch of money in that company very quickly because, again, it was a technical product and without the CTO. And it's one of those, I look back, and we did a post-mortem, and just the reality is, I don't think there was anything we could have done. He hadn't told anyone. He hadn't given any indication he was going to leave. It's one of those, he just kept it inside, and he quit, and we lost money. But such is the nature of venture.
We tend to get in trouble when we start doing people favors. Obviously we see a lot of deals because our friends give us great deal flow and we return the favor, but there are deals where Brian and I, we have our list of companies that we will never invest in certain sectors that we know just, unless you're the largest player with the largest war chest, you just don't have a shot, right? The product could be beautiful, but you just don't have a shot at being meaningful or growing. So there have been probably 2 or 3 instances where, how we win is we play nice, we're good guys, we offer companies real value, so people always want to kiss us into their hot deals. And sometimes the allure of being invited to a party trumps our business acumen, and that's what, when the wheels kind of fall off of our investing wagon and we end up getting stuck. And the lesson there is the least amount of time I spend with any of my companies is a company that's doing really well. The most amount of time is a company that is, you wish it was a company that wasn't doing well, that's going to close up shop, but it's actually a company that's going sideways, and you're just kind of catering to the Walking Dead. And if you have too many of those, you should just get out of the game, because there's no focus. You have no time, no energy to really look for and support the companies that are growing in your portfolio.
I also am not going to point to a certain startup in our portfolio, but I think we learned the lesson the hard way, and pun intended on the hard part, because I think we have realized that we don't know how to invest in hardware. So we've tried a few investments in hardware, and A, we don't understand it too well. B, it's just a different animal, the type of funding that hardware startups need. Hardware is literally hard. So we're staying clear of hardware based on our not so good experiences.
All right, so we just have a couple of minutes left, so I'd like to leave this open for Q&A. If people have any questions. I always complain about Korean events. No one has any questions. Anyone have any questions? Oh, back there.
Do you do follow-on investments? Like what kind of engagements do you have after you invest?
Yeah. Go ahead.
Okay, a lot of our time is spent helping put follow-on rounds with Series A investors. It's, I think, where we can add the most value when we can partner with Series A, Series B type of investors and help put together a nice, sexy round that will propel the company into huge growth. And it's it's one of the most rewarding experiences, actually, just being able to really help the founder find top quality investors and lift that company to the next stage is super rewarding.
So we, by definition, as sort of a $10 million fund, we don't do reserves. What we typically would do for pro rata is we'll syndicate to our LPs. And so I think that's actually pretty common for a lot of sort of pre-seed seed funds.
I think out of our first fund, we really didn't have any reserves set aside for follow-ons, and that was by design. We didn't really go and raise an official fund. It was our money, and then some of our closest friends kind of piled in. As we start the process of raising fund two, we'll definitely have a follow-on strategy, where I think a lot of us provide value is all of us were at some point operators. So when we pitch ourselves to get into a hot deal, you have to kind of prove our value, and a lot of it is spending time with the team, asking where they have certain needs, and a lot of it is sort of on the HR side, right? They're going to need a CTO, they're going to need a CMO. They'll ask us about what are the metrics they need to hit in order to raise their Series A, and if so, what's the valuation? Who are the investors who are most inclined to invest in the type of company with the growth metrics that you have, given the check size that you're looking for. So, maybe it's self-interested, but I think the right investor adds a lot of value, not only from a money standpoint, but from a kind of services standpoint. So if you have the luxury of choosing between investors, and very few people do, then consider yourself blessed, and you should really do the homework and figure out who is the right money for you.
Any other? We can take one more question if anybody has anything.
So, obviously you've seen a lot of founders over the past years. So out of those founders, do you see any common traits among the successful ones that you don't see in not so successful ones?
From my perspective, and again, just understand my portfolio, now that I'm back on the investment side, is only 15 months old, so I've been fortunate that none of those companies have failed yet. But actually 100% of them have raised follow-on funding at a high valuation. I wouldn't necessarily equate that with success, but that is kind of a metric people look at. I would honestly say the single most important factor is just persistence, just grinding, just willing it. And that's why one of the primary reasons I only back mission-driven founders. Because if he or she is solving a problem that he or she acutely feels, I tend to find those entrepreneurs don't give up when the shit hits the fan, which it inevitably does at early stage startups. And so the single most important thing I look for at the earliest stages is an entrepreneur who's willing to grind it out.
Just to add to that, the one thing we always try to test for is guys and women who will actually build stuff, right? Everyone sounds good in a pitch, but our bullshit filter is set pretty well nowadays, because we've gotten in trouble with guys who just sound really great closing the deal in the room, but 6 months down the line, they're nowhere further down their product roadmap. 12 months in, they still haven't launched anything, and then you quickly realize that these aren't entrepreneurs. They're guys who kind of had a passion. You validated what they needed to know by putting money into it, but they had no real inclination or desire to build a business. So don't be paralyzed by indecision, thinking through everything. A lot of it is just launch something in the world, see what the reception is, and then hone and rework on your product, as opposed to just sitting there and just trying to release the perfect product, because technology is moving way too fast and there's just way too many competitors in every field that's just going to pass you by.
So I need a one-liner from everybody before we wrap up and we can go to the startup pitches. To receive funding from you, what does a founder have to do?
There you go. No one wants to talk.
Well, I'll just answer your previous question and let the others answer. But one trait that we see in, we've done now, we're doing like 50 to 100 investments per year now we're doing. So one of the traits that we see in outstanding founders is they're odd. There's something weird about them. It's like there's quirkiness around them. Yeah, it's something's off, but that's what makes them really special. And so if you're quirky and a little different, don't be ashamed of that. It's actually sometimes the part that will draw attention from the investors.
I guess to answer Sang's question, it's kind of a cop-out because it's just a rehash of what I said. To raise money for me, attack a really interesting problem and be mission-driven, scrappy, and product-focused.
This is a loaded question because I think I want to drink beer after this as opposed to listening through a lot of pitches. But part of what we do this for, obviously, is to support entrepreneurs, and that can be with advice and with money. So I think if you believe in your idea, you're going to have to be the biggest advocate for your idea, which means you need to be persistent. So if you want money from me, let's be persistent. I don't know if I can meet with you, but I'd love to see your deck. I'd love to, hop on a 15-minute phone call just to see if there's a kernel of an idea that I can support. But it's about shots on goals these days. If you don't take shots on goals, you'll never get funded, and your company has no chance of surviving or even existing.
Rich, Bong, John, thank you so much for your time. If you could give a round of applause. I saw the question. We do have to move on now to the interesting part, more interesting than investors talking, right? The interesting part of the night, we're going to have companies come up and pitch to the panel of investors to get some real-time feedback. So I'm going to hand it over to John of Strong Ventures to lead us in the startup pitches.
Thank you. And thank you all for coming today. Rich, can you take each, and Bong? So they'll join the panel of judges. Yeah. So the second part is we're going to go through some startups, and Sang mentioned a few additional VC seed funds that are here represented, and just wanted to quickly introduce them. So how many of you have heard of Collaborative Fund? It's a super well-known seed fund here, and we are honored to have their presence. Kanyi, if you can sort of wave. Kanyi is a partner at Collaborative Fund, and he'll be helping to judge and comment on the startups tonight. And I don't know if you guys knew, but Collaborative Fund is a Korean fund, right? No, I'm half kidding, but actually some of the... Is it okay to say those things? Okay. Because Collaborative Fund actually, so we VC funds also have investors who invest in our fund, and Collaborative Fund is actually backed by some of the top entrepreneur founders from Korea, such as Jae Kim, founder of Nexon, Jaeong Lee, founder of Ktown, Lee Hae-jin, founder of Naver, and so on. So hence why it's a Korean fund. Yeah, and then Jay, who's the founder of Nexon, is a partner, third partner at Collaborative Fund. So he's both LP and GP. So just to let you know that Collaborative Fund has that those roots as well, and that they are very pro-Korea as well. And then we have Heesun from 500 Startups, and Heesun has, we've known each other for many years, and she's been helping Korean startups from, she's super young too, but she's been helping Korean startups from when she was in college a few years ago. And she used to be with YouNoodle, was a founder of her own startup, and now she's a venture partner based here in New York for 500 Startups. And as you may know, 500 Startups actually has a Korea-focused fund called, I don't know about the name, but it's 500 Kimchi. And it's based in Korea, and actually in Korea, in Campus Seoul, Google's Campus for Entrepreneurs. 500 Kimchi and Strong Ventures, we are the two VCs in-house there, and we're neighbors. So we are honored to work with them, and we've done a lot of co-investments with 500 Startups as well. And then I want to also introduce Shai from Silicon Valley Bank. And Shai was also with 500 Startups before, right? And now he's the head of Silicon Valley Bank here in the New York area. And also we, hats off and thanks for being one of the head sponsors of the night. And so Shai being from a BC background, he's going to help judge as well. And also, I don't know if you know, but Silicon Valley Bank is the bank to, I think, probably over 50% at least of the top VCs all over the world, and also a top bank to a lot of startups, and super agile. If you go to their offices, it's like a startup too. So that's why Shai is not dressed like a banker, he's dressed like one of us. You're 90% Korean, yes. And Shai, I don't say it as well as you do. Can you tell us a little bit about Silicon Valley Bank?
Real quick, so yeah, Shai at SVB, we're a global commercial bank for tech startups, venture capital funds, and also high-end wineries. We're in Israel, UK, all over the US, and China, but we're spending a lot of time in other Asia markets, specifically Korea, which is why we're here today. We're spending a lot of time in that market exploring what we could do there as a company, and we're very bullish on the opportunity in that country, so thanks for having us.
Thank you. So thanks again to Shai and Silicon Valley Bank for being a great sponsor of the night. And as Shai was mentioning, Silicon Valley Bank also banks the top wineries in Napa and other places. And so based on those winery relationships, many a time they sponsor our events with wine. And so the speakers only got some great wine. So we appreciate them. So let's, without further ado, let's start with the first startup. Which one is it? Okay, Palate. New York City-based startup, and Palate? Okay. Let's give it up.
Hello. All right. Can you guys hear me? Hi, my name is Mike, so I'm here to talk to you about Palate. So as New Yorkers, we eat out a lot. We go out to eat maybe because we're hungry after work, or we go out to eat because we're on that second date with that person we met from Happen or Hinge or OkCupid or Coffee Meets Bagel, or even Tinder. And sometimes we go out to eat just because we're going to go out and meet up some friends and celebrate something. Now in the last few years, we've seen a lot of great products that have come about that help us figure out where the best places to go and eat are. Things like Yelp and Foursquare are fantastic at this. But these products were not built to help us with the next problem, helping us figure out what to get once we're actually there. I used to live in Barcelona for about 4 years, and I do speak Spanish, and I understand some Catalan. But I always had this problem when I went to a restaurant. I never knew what to get. I never knew what that best thing was. And I almost had this fear that I would regret my order decision. It's funny because the same thing happens here in New York, and English is actually my first language. So when we go to a restaurant, we sit down, we try to figure out what to eat. We naturally do a couple things. We might look over to see what someone else is having, or we might ask the waiter what his recommendations are.
Probably most of us will go back to our phones and we'll open up Yelp. We'll dig through lots of long form reviews and text, which is kind of hard to read. And if that doesn't work, we'll actually go and look at the photos. There's a lot of photos, but they're kind of seemingly random. And they don't always tell you what the best things are. So that's kind of where Palate steps in. Palate helps you find the best dishes and drinks at a restaurant by showing you menus with photos and ratings per dish. So it's pretty simple, but how does this actually work in reality? So let's say my wife and I, we go to the Mermaid Inn to get seafood because we're hungry. Now, when I go out to eat dinner with my wife, I actually never have the problem of knowing what to get because she just orders it for me. But let's say that she doesn't actually know what to get. She'll open up Palate, and maybe she wants to see what the best things are at that restaurant. So she'll hit the recommended menu and see the top 5 things. She can scroll down, and maybe the Lobster Palooza catches her eye. So she taps into it and sees all the photos related to Lobster Palooza. She can also scroll down and see a detailed description of it, as well as captions if anyone's left any. Maybe she wants to bookmark it for later. But let's say actually she wants to see the entire dinner menu. So she goes into it, and at the top, she'll see all the different sections that actually correspond to the physical menu in front of her. So with a single tap, she can go to any of these sections. For example, happiest of happy hours. So maybe she's scrolling down, and she's actually been here before, and she's had the mermaid fish tacos. They were really good, but she didn't rate them last time. So she can rate them pretty easily just from here. Or she's like a lot of other people here, and she likes to take food photos. So she hits add photo, and because we know where she is and what she's having, all she has to do is optionally add a caption, give it a rating, as well as choose any other social networks that she wants to share to outside of Palate, so Facebook or Instagram. So where's Palate today? So at the end of last year, we actually did a soft launch, and we focused on the East and West villages of New York, because we wanted to make sure we were focusing on product refinement and improving user engagement. So in terms of user engagement, we skipped a slide, but we've seen that on average, people spend about 7 minutes per session on Palate. I guess the slide is just gone. It's still pretty early for us to have things like LTV or CAC, but we've estimated that our annual customer value is about $5 based upon the different business models that we're exploring. Now the question of who's actually willing to pay this $5 per user? Well, in our market research, we found that the alcohol and restaurant industry spends about $8.6 billion a year on advertising in the US alone. And $1 billion of that is geared just towards digital advertising. So it's actually been a great trend to see because it's a 40% year-on-year increase. And it looks like it's going to continue that way. So who's actually behind Palate? There's myself. I'm a full-stack developer. Previously, I was also a design and innovation consultant, working in Barcelona, as well as doing the same thing for Samsung in Korea. I also have an MBA. My teammate is Monica No. She was previously the marketing director at Marley Spoon, which is another food startup here in New York. She's also a previous entrepreneur, having her own brand called Carte Blanche, and she went through Startup Chile. So up until last week, we've actually been completely bootstrapped. But we're happy to say that we've just joined Primer Accelerator and have been backed by Strong Ventures and Sajay Partners. So I guess that must mean there's something off about me, something a little bit quirky. But just to finish up, I wanted to let everyone know that we're still working on our user feedback program. So if anyone eats or drinks or goes out or lives in the East and West villages and you like food, and if you want to help us build a better product for you, please come and talk to me afterwards because I'd love to hear your feedback. You can also find us on Instagram, a little bit of Twitter at palate_HQ. Thank you.
Thanks for the presentation, that was interesting. How have you been acquiring your restaurants to date? How have you been acquiring your restaurant menus?
So the restaurant menus actually come from a source called LoQ. It's a free API and they provide menu data to Yelp, as well as other places like GoDaddy. So in the future, we're also going to be looking at things like single platform. So we don't actually go ourselves to the restaurants. It's all the data is collected for us.
And the second question is, sorry, I have to. The second question is, how painful is the pain point of not knowing what's the best on the menu? When you said most people ask the waiter, that's what I do, and it works fine. And so can you help me understand why it's a problem?
Right. So I think with a lot of people also when you ask the waiter, there's still a bit of fear. It's like, is this guy is this the actual best thing? Or is this the thing that he's trying to upsell? Likewise, your tastes might be different from the actual waiter. Because I've asked the waiter before many times, said, what do you recommend? And he says, well, our new special is really good, and it's like enchiladas or whatever. It comes out, it's like half an enchilada. But then you never knew that, but if you had seen a photo of it, you might have known better.
I guess one of my questions would be, you said you were exploring several business models, kind of giving us a little bit more into what you're looking at.
Sure. So one of the main business models that we're actually exploring is sponsored posts based from different brands and restaurants. So mostly at the beginning we'll focus on alcohol brands. But the idea is that in the feed there's a section where you can see the trending items nearby. So maybe the third one down is actually a sponsored post that's targeted based off of your location and will actually take you to a restaurant where you can get that item. We have a couple other business models which I think are interesting, but I'd like to talk to them in more private.
And then this is a question for all mobile app companies. There's obviously hundreds of thousands to a million mobile apps out there. So how do you get discovered? There's a lot of noise. So how do you get above the noise in this sort of crowded space? Some ideas around that.
So I think our main focus right now is building a really amazing product. And I think our gut feeling is that what's going to happen is that since usually when you go out to eat, a lot of times it's with other friends, it's that point of discovery when that other friend says, oh, let's check Palate. It's really amazing that it kind of spreads by word of mouth. We haven't really been looking into doing things like paid advertising because, like you said, there's a lot of noise with it and it actually takes quite a bit. So we want to focus to make sure that it really works as a user expects.
Any comments from Palate? So let's give it up for Palate. So while the next, by the way, yes, I want to thank KSE and the New York community because we actually discovered Palate as we were screening for this event. And so you asked which one of the fastest deals we closed. It was this one. It's within the last 2 weeks. So
Can I ask you a question?
Yeah.
What got you excited about the company?
I think the founder. Yeah, the founder. More than anything. So we'll see. We'll see. Maybe we help. Okay.
You got bet on the horse.
Yeah. So okay, while the next startup Trove is getting ready, I want to introduce also Trove. Yeah. While Trove is getting ready, we wanted to also thank and introduce another sponsor of tonight, JC Associates, Josh. Josh is with JC and Associates, and it's a top accounting firm to funds like ours, and also for startups. And they have offices in LA, Silicon Valley, and New York. Yeah, you want to say something? No? Okay, so that's Josh. If you need any help with accounting matters, they're a great firm to work with.
Hello. Oh, this is very loud. Great. So, we're from Trove, and our vision is to change the way people shop for custom goods. So, the millennial generation, we're all about expressing ourselves through Snapchat, Facebook, Instagram, updating people real time. We're always finding ways to express ourselves. But, how do you express yourself with things that you own? And that's via custom goods. But customization is always tough. Like, I'm not an engineer or designer by background. I was a PM at Zynga, so I'm a product guy. But when I wanted to design something, I didn't know how to operate CAD. I wasn't an engineer, I wasn't a designer, and even if I could do it, I wouldn't know what it looked like in real life. So I would have a lot of hesitation in purchasing custom goods online. So, how do we solve this problem? Trove. So Andrew's gonna help me navigate this. We actually built this in about 4 months and soft launched in October. So, let's see. Just bear with us 1 moment, it's coming up. All right, so while he's waiting, let's talk about Trove. So we envisioned a platform where we can discover, customize, try on, and receive product. We tested a bunch of different verticals, from furniture to clothing, and jewelry is actually the one that resonated most. Perfect, so we got the site up. So this is actually the site of Trove. We soft launched this in October, and it kind of acts like an e-commerce site when you first see it. But what's the special sauce in our product? So if you navigate to the next tab at top, it's actually our customizer. We're like, how can we make it so easy to customize so that my mom could do it, who struggles attaching email? And it's basically drag and drop. Imagine if you could just drag, and it'll actually edit the jewelry piece online. So you can spin it around, manipulate it, it works on mobile, so you can zoom in and out of it, and you can actually design your own piece of jewelry. But what's next? We actually send you a plastic piece right here. We 3D print this plastic and send it to you for free. So you can try it on, make sure it fits, and make sure it works with your outfit. Once you can either get this, change it again, or cancel it, and we'll just charge you for the cost of the prototype. After you confirm it, we'll actually send you this metal piece right here in rose gold or whatever you purchase it in. We can basically manufacture from bronze to 18 karat gold, and we manufacture in the diamond district. If you want to take a look at it, here's right here. So this is when you can open your things and play around with this stuff. So yeah, so if you go back to the presentation, perfect. So we actually soft launched this in October and realized that users really, really enjoyed it. We got constant feedback from our users that this is such a unique experience. I love my ring. The people wear the plastic ring around for about a week before they actually confirm it because they want to make sure it fits. They send us images, they call us, it's been fantastic. But what we actually didn't realize is that when we launched, we got a lot of press. So we were featured on TechCrunch, Mashable, Fortune, Refinery 29. People were just saying this is the first application of 3D printing for the everyday user. So it's actually a pretty awesome launch for us. The thing that we actually didn't notice that was actually kind of the icing on the cake was industry. So Guild City reached out to us. We had a featuring in January. They extended the featuring by a week because of how it was performing. Top fashion brands in New York, like Tory Burch, had inbound interest in our customizer because of what it could do and how they kind of saw the future of fashion. We're also working with influencers with about 1 million plus subscribers to launch private jewelry collections on our site. So basically that's going to drive traffic to our platform so that their followers can customize goods on our site. And we do a profit share. So what's our AOV? So our AOV is $140 for when we want to build a business, we want to build a solid business with good unit economics. 40% is not good enough for right now. We want to get to 60%. So it gives about 20 to 30% to acquire customers. That basically leaves us about $55 to actually acquire users right now. And it costs $5.50 to ship the plastic version out for free. So we have a lot of room to work with and acquire customers. So the goal is actually not to build a jewelry company. The goal is not to build a custom jewelry company. The goal is to power customization on the web across all product verticals. It's about giving users the confidence to create. Because we believe that everybody has an inner creative person inside of them. It's all about giving you the confidence to really harness that person. So that's kind of the mission and vision of our platform. So our founding team, we have 6 people on our team full-time based out of New York. My background, went to Penn undergrad, was a PM at Zynga. My co-founder Andrew taught digital design at the MIT Museum, specifically in 3D printing and worked in product design and fashion. My co-founder Tim, he's basically a certified architect and a full stack dev, built our platform up in about 3 to 4 months. We've been lucky enough to have some excellent investors with us. So Mike Hirschland at Resolute Ventures led our last round and is leading our current round. Uprise Ventures, among others. We work with a lot of the top manufacturers in the Diamond District to produce our jewelry. Ted Wang from Fenwick & West represents us. Have a lot of advisors, and that's how we source our deals. So the current round that we're raising right now is 1.5 and 6, led by Resolute Ventures. We have about half the round full, and are looking for another check to fill it out. Thank you very much. Any questions?
So wait, you actually 3D print the actual
Plastic. Yep.
No, but then how do you actually make the actual gold?
So the gold one, we use a process called investment casting, which has been around for about, since jewelry has been really there. So what we do is we 3D print the wax.
Okay.
And that's where the efficiencies come in terms of custom goods.
And so the unit economics that you showed were based off of making one of these custom pieces?
Yes.
Like it's that cheap?
Yes. Exactly. So we can actually get manufactured for about $20 to $30. And actually, the majority of the cost comes into wax printing. So the actual metals and the casting process isn't that expensive. It's actually commoditized in the diamond industry, unless you're printing in gold. Yeah.
Well, one more question. What's the drop off between people who actually will play around and create something versus actually
Yeah,
getting
so
a ship?
actually a good portion of it. So when we break down our kind of transaction volume, 55% of the users have actually customized something on our site. And then if you break it down by age groups, that number jumps to about like 60 to 70% for the millennial demographic.
And then how many actually get them and then buy them?
So actually, so the conversion rate from the plastic to the metal has been 100% so far. Yeah.
And then from customization to plastic.
Oh, so customization to purchasing the actual goods so far. So conversion rates are about like 1.5 to 2%.
Impressive.
Thank you. Thank you.
So how'd you go from Zynga to Jewelry 3D? So like, why did you start the company?
I get that question all the time. So my mom actually worked in fashion for about 15 years on Rodeo Drive at St. John. So growing up, I used to carry up and down clothing, tell my mom out on the weekends, and really like that's where I first got into fashion. And then as I started kind of exploring at Zynga, so it'll all tie in, I promise. So at Zynga, I was kind of exploring 3D printing for a while. I thought it was very interesting technology. Me and a couple of buddies pulled in money to buy one. Realized that I couldn't use it, and I was like, but what's actually very interesting here is the design portion of it. Even if I wanted to use it, I couldn't use it if I didn't have the design. So that's kind of, I was like, I want to build a platform on top of the design layer and make it valuable for the everyday user.
Great presentation. It was really wonderful. In terms of the customization, do you see a lot of, or how many users have purchased something? I mean, the products are very beautiful. How many purchases have been made?
So right now we're sitting at 200, mostly because what we realized is that we were very heavy on kind of the social component at first, in terms of like people sharing designs with each other, etc. So we put the checkout flow behind an authentication layer, and because we didn't know how much press we would receive the first day, so we actually lost a lot of kind of potential sales due to people hitting the sign-up page and lapsing. But we fixed it now and we launched it, so we expect conversion to go up.
And then in terms of the designs, I'm noticing that there, I guess, are base designs that people are kind of tweaking. Are those kind of refreshed on a regular basis, or is it kind of your staples that are going to be customized by whoever? Or, where does that happen? Do you see a lot of?
So we have an in-house design team that produces designs. Also, when we partner with influencers, they're going to launch their own private designs on Trove, and that kind of helps refresh designs. And with regards to your base template design, we realized if we increase the design sphere to too much, users will get overwhelmed. So that's why we do a base design and limit the customization to the design.
Really, really liked it.
Thank you.
I was going to ask about defensibility, as it seems like it's a tool and doesn't have a network effect, but it sounds like you guys are going to open the platform up.
Yes.
Can you spend a little bit more time talking about that?
Sure. So in terms of defensibility of the business, I want to approach it from kind of three angles. Number one is you need the engineering and 3D team to build this, compounded by you need kind of the fashion industry clout. And those two things we are finding is very tough to find unless you're warm introduced into that market. One of our advisors from our previous round was George Miller, which is how we got into that market. So just having the clout plus the engineering team, we're realizing is a lot more difficult to find than what we initially thought. In terms of building a defensible market, we're basically targeting a lot of influencers to be on our platform and then create a lot of traffic coming into our platform so we can launch new influencers and just have a constant stream of traffic where users are sharing designs from each other, commenting on designs that are created, sharing their creations with each other. And that's where you create real value, is that on the design layer and the data layer on top of the customized goods. And that's kind of what we're going for.
I guess in the second, that's a great answer, thank you.
Thank you.
And then the second piece is, I'm curious about, so obviously you need clout to enter the design world, but you also need good taste.
Yeah.
And where's that coming from?
That's coming from my co-founder Andrew, who's sitting behind the banner right now. But yep. So
very well dressed.
Yeah, very well dressed. He wears good jewelry. He's the right guy to do it. He actually taught digital design at the MIT Museum. Grew up in the fashion industry.
Yeah, I mean, I've experienced in working in the garment industry in Los Angeles, doing product design for a bunch of high fashion brands that were manufacturing all in LA. I've launched my own kind of like small brands on the side, just kind of as personal creative projects. So I'm like very much involved in creative endeavors and really expanding creativity of other people on Trove.
Call me.
Yeah,
think, yeah, we are out of time. But thank you. Let's give it up for Trove. The next team presenting is 3KOLABS. So while you're getting ready, I want to introduce another sponsor of the night, Kotra. Kotra is a Korea trade promotion agency, right? Did I say it correctly? And I want to introduce Joseph, who will talk a little bit about what they do here in LA. I mean, New York.
So they wanted me to come up for a smoother transition and not for anything else. But Kotra is a Korean government agency, and we serve many functions. But I am specifically in charge of 3 things, along with our colleagues there. First is we assist a lot of startups, right? So we've been partnering up with KSE as well as Kori and Okta in the past couple years to host large-scale startup conferences. I think you guys may remember that last April we hosted a 400 plus attendance event at Microsoft, followed by an October event where we hosted an event as part of President Park's visit to the White House. It was like a presidential event, and we decided to put together something along the lines of creative economy, right? So we had the same line of speaker actually that we have today as the main keynote speakers. Second is we assist intellectual property matters. So if your company is incorporated in Korea, we actually subsidize your trademark and design patent filing fees at the USPTO. Third, if you're looking for a job, we also have employment matchmaking services. So if you're a Korean national or nationals, you can come find us at our booth over there, and we'll be happy to chat with you guys. Enjoy.
Thank you, Joseph. So the next one is 3KOLABS.
Sorry.
Where is mine?
Oh, you just keep going.
Okay, gotcha. Am I still going? Okay, there you go. Hi guys, my name is MJ, and I'm a founder and CEO for 3KOLABS. So we are trying to bring fast fashion for kids. And then there is one problem that we want to solve. So Zara or H&M or Uniqlo, you guys always go after fast fashion, but there is no such a thing for kids. And then as an adult, I'm pretty sure in this room, everyone is over 10 years old. And then you guys, as on being adult, and you guys have all the privileges and all the advantages, go after fast fashion, but not for your children and not for your kids. That's what wanna solve this problem. So as a Korean, and then you probably know because most of them here are Korean. So in Korea we have Dongdaemun market, which is one of the largest, world's largest fashion wholesale market in Korea, which is over $10 billion. And then I look back in Korea and I found out there are 10,000 indie fashion labels only for kids, and amazingly they create about 100 new designs every day. So I thought if I can provide at least 50 new designs a week, and then if I can deliver 2 to 3 business days to the States, it could be a fast fashion for kids. So while I was preparing everything, so you know the Dongdaemun market, you have to go night market after midnight, 1 a.m. So I went there over a month, every day, in order to secure as many as possible. So at the end, I secured more than 100 brands to kick off my startup company. And we are major focusing on US market at the moment. And then our target market is online children apparel market, which is $13 billion. And then we launched our product last year, April 1st. And then at the time, my biggest concern was whether US amazing moms will purchase made in Korea product or not. But then outcome was really amazing. People actually loved our product, and then they posted, it's beautiful pictures, right? So they shared it through social medias, including Instagram, Facebook, and including Hollywood celebrity. She loved our product as well. So at the time, we realized that made in Korea product is not only working for amazing US moms, but also high-end customers in the States as well. So after 3 months of launch our product, and then we looked at our numbers, and then we figured out that most of buying customers coming through Facebook. So we definitely had to come up with some sort of technology to drop down our customer acquisition cost. So we came up with Madra. Madra meaning is marketing automation through dynamic resource allocation. It's literally, it creates thousands of ad sets through Facebook within a second. And then it tracks all the thousands of ad sets in real time. And it putting more resource into better ROI ad sets, and it's stopping worse ROI ad sets. And then we do it again and again and again every day. And by doing this, we dropped our customer acquisition cost by 65%. Our customer acquisition cost is about $20 to $25 at the moment. And then this technology also got into Korean government R&D program where we raised $300,000 free cash, no equity. I love Korea. So let me walk you through with the numbers. So total traffic, our 95% of traffic coming from mobile, and the average cart volume is $82 with a 40% margin, and our conversion rate is about 0.8%. And then we are working with the FedEx, so all the delivery to the US customers within 2 to 3 business days. And then after purchase, moms loves our product, so return rate is less than 2%, and the repeat purchasing rate is about 30%, and the average days between first purchase and second purchase is about 21 days. And then we are growing really fast. So for example, from January to February, we made 100% growth rate. And then we believe we can make over 50% of a growth rate until June. And then we project our revenue will be more than $1 million within this year. And we are a team of 8 with 4 core members, myself as a CEO, and I went to Syracuse University, and I used to work for Accenture. And my CTO, he is a full stack developer, also expert on data analytics. And our marketer who used to work for Deloitte, and my MD she used to study in here, FIT, and used to work for MCM. So we raised the first funding from Primo, which is one of prominent accelerating program in Korea. And we also raised fundings from Silicon Valley, LA, and New York, and even Korean government as well. So thank you for listening, and then I'm happy to answer all the questions you may have.
Yeah,
thank you.
That's
Why do kids need fast fashion?
So because my hard time was when I was in New York City, and whenever I go back to Korea, I had a hard time to find some decent kids clothing for my cousins and my friends' daughters. But either you have to go to Zara or H&M or really, really low-end Zimbori or Cutters, or you have to go to a really, really high-end French high-end brands such as Bong or Bonton. Those brands is for like a Kardashian kids or Northwest, who is daughter of Kanye West. It's too expensive, $200 to $300 small dress. So kids doesn't need fast fashion, but they deserve to wear trendy and decent quality of clothing.
Do they want to wear trendy clothing?
So my customers, who is mostly moms, right?
I happen to agree with you and think this is nice, but I want to hear you explain it.
Cool. Yeah. Yeah. So I think the reason why my customers keep coming back to our website because I never realized that they have so many anniversaries. For example, if you have a daughter, you probably realize that you have birthday parties or Christmas parties or wedding anniversaries. So you have tons of events with your little girl, and then they definitely have to have some sort of decent dresses or outlook for themselves. But also those moms are looking for trendy one, not for $10 worth onesie or something like that. So they just keep coming back to us because we are working with so talented designers who create the trendy outlooks from time to time. Yes, thank you.
What is the price point for some of your items? Meaning, the average cart was 80 something, but for a piece, for a dress.
For dress example, this is dress is our best-selling item, which is between $30 to $60. It's really close to Zara's price line. But then if you compare to same quality or similar quality, similar design, but if you are trying to purchase something like this from, for example, in the States, probably you have to pay more $100. So our design is decent, but cheaper than our competitors.
You want to ask? Sure. Okay.
So if you're sourcing from Dongdaemun, who's taking care of the photography? How are you dealing with your inventory? Like, are you working with all of the brands and they're listing their full rack of inventory? Or are you curating the experience for your consumer? How does it all work?
So 2 questions. How we're gonna manage with the photo quality and the inventory. So photo quality. So we are working, so many of our brands, 50% of them, they have their own photos and then they provide it to us because they have to do it for their catalog work. And then 50%, those are new designers who have really talented to create really cool design. And then we have our own photographer. So we are constantly shooting for our own use as well. And then for inventory, so one good thing about fast fashion is that we keep changing. So for example, if you see this dress today, and it's probably more than 50% sure that this dress will be gone within 3 weeks. So we keep changing it. So we buy all the inventories, but then we don't buy that much of stuff. So overall, all I have to do is buy probably 50 or 100 pieces for each design. But then after we sold out everything, we purchase new designs. All right.
Thank you. Let's give it up for Green Talk. This was one of those trends of Korea going global trends we are seeing in fashion as well. And while the last startup is getting ready, Orderhood, I want to thank especially WeWork, which is providing this space to us for free and really giving back to the community. And if you want to find out more about WeWork, there's staff here that you can ask questions. Want to especially link it back to Korea. WeWork recently opened a center in Seoul, Korea. And actually the community manager for that space is visiting New York. So I asked Sujin to tell us a little bit about what WeWork is doing in Korea.
Hi everyone, my name is Sujin. 안녕하세요. I'm from Korea, and I'll be community manager of WeWork in Seoul. So actually we have not opened yet. So it's just today, it's got official that we are opening to Korea this year. So stay tuned. So to spread our mission to make the world, to make for the people, where the people work for a life, not just a living. Well, I don't know like how many people have experience in working actually in Korea or Seoul, but I do have myself worked in Korean like traditional company Daekyuk, and I found myself like, why don't I happy with my work? Like I need my work to be happy, and I need my work to be my life. And now I feel, I've been doing like WeWork for only like 2 months, but now I feel like my work is my life, and I'm really happy about it. So I need your encouragement and support, any feedbacks on our WeWork businesses Seoul. Yeah, so please contact me and meet me later, or just email me sujin.kim@wework.com for any feedbacks. Will be welcome. All right, thank you so much for coming tonight.
And last but not least, Orderhood.
Thank you. So, I'll introduce you to Orderhood. That's our company. We're in the on-demand services. We launched our B2B platform November with one algorithm in 5 months. and in 3 neighborhoods. We were able to partner up with over 100 restaurant partners. We have actually over 120 delivery personnel. It should be 150 now because we recruited 30 today. And they're all on the books. Right now, currently, monthly, we process about 15,000 deliveries, and this is excluding pizza. We're actually launching on our 4th neighborhood next week, which includes Koreatown, Ktown. So we actually have around 6 to 8 restaurants in Koreatown, Korea Way, that's gonna start their delivery. They never delivered before. Start delivery because of our B2B services. Right now, within that 15,000, we have a 97% delivery success rate. 90% of the orders are delivered with less than 30 minutes. From the time that you order on Grubhub and you get your food, if we're delivering it, you should get it within about 28 minutes. Now, the question is, we are now moving towards, we're launching our B2C platform in about 2 months. But isn't this market crowded? That's the first questions that investors ask us. Now, the estimated US total delivery market size is $70 billion. But, you know, Grubhub actually announced last month, like the CEO said, they've only penetrated about 5%. Other experts say about 13%. But my question for that was, why did it slow down? Because it grew pretty fast, but it started slowing down. The problem is one thing, people are hungry. But making a decision when you're ordering on those platforms is very difficult and takes a long time. Next one is, delivery consistency is very uncertain. Now, why are deliveries slow though? That's the first question for a lot of restaurants. And the restaurant owners tell us it's because it's a balance between uncertain delivery demands and maintaining delivery personnel. They just don't know how many to have on staff because it's so uncertain. Now, why is ordering slow? First thing is, it's a stagnant ordering process. As soon as you open the app, you try to filter yourself to what you want to get, but it's actually you're surfing through, let's just say 400 restaurants are right in front of you. Each of those restaurants have 50 menu items on average. So you're trying to browse through about 20,000 dishes and trying to find that one dish that you want to eat for lunch. So the average is actually 13 minutes to about 18 minutes for you to even decide what you want to eat. Now, that all comes through. The reason is limited use of content. It's very limited. Plus, there's a big lack of social engagement. Now, I've actually covered all the problems. I'm gonna pass it on to our CEO, my best man, Richard.
Hi everyone, my name is Richard. Today we're going to present our solution. Basically, we feel like the question in the industry hasn't been answered yet. So basically 2 questions. And for our B2B, we kind of answered that question already, deliver the food fast. So now we're going to dive into to get people to order easier and faster. So next. Before we, Jason talked about the problems, and I also talked a little bit about the problem already. And then we come up with our plan to solve that, to solve the problem. But we ask ourselves why. Why we want to solve this problem? And it's not on the slides, but actually we want to talk about it because we feel like that we're fulfilling the very basic human needs to eat. People need to eat. And second is very sociable, right? The solution we come up with is very sociable. There's a reason why we want to dive into it and then build our B2B and then start utilizing our B2B to promote our B2C. So how are we going to do it? So basically Orderhood is building a container app, which is the content is going to be fulfilled by the curator, and then the suggestion coming from them is going to be very intuitive and very personal as well. And of course, we're going to expand it through whatever you suggest or whatever you order you love. Of course, you can share it with the social media, like share the love in food. And what all that result is faster ordering process. We have done so many focus group for the past few months. And we love to ask one hypothetical questions to our testers. It's like, what if your refrigerator goes down for the next week, and you have to order every single day for the next week? And almost like every reaction we're getting from the tester is like, oh my God, I don't even know what to eat, like what to order tonight. So we feel like there's a big question mark that hasn't been answered yet. So from our focus group, 30% of most of the testers found that ordering with our app is 30% faster compared to similar Grubhub or major ordering app. And we have been working with more than 10 angel content curators to provide suggestions. Some of them is coming from yoga instructors or like personal trainers. And the content they can provide, the suggestion they can provide it is actually, there's no boundaries. And we could, okay. And we're about 1 to 2 months away to launch our app. So how we're going to execute, I'm going to cover very quick. So we have that idea, how we're going to do it. We're going to recycle the 15,000 orders that we are doing currently in East Village, West Village, and Lower Midtown East. Basically, 80% of them, all those orders are coming from the ordering app. It's going to be our competitor. And we're going to use the social media to push it out further. And so what we intended to achieve is like, we work with more than 100 restaurants. And they're gonna be our partners on our ordering app right now. And then we're gonna work with a very specialized curator to provide suggestions. And we have a very steady and very consistent delivery team. And, I don't have too much time, but I would love to introduce my team sitting over there. Let's go to the next one. So far, we have raised $500,000, $500,000. To build an awesome team and also achieve the great results. We're seeking for $2.5 million, basically to build, to hire more developers, hire more designers, hiring the data analysis and data scientists actually, and then customer service team for our B2C app. That will be it.
Thank you for that. Why are you doing both B2B and B2C now? And the reason why that's a question from my standpoint is you're going to have to fight a customer acquisition battle on the B2C side, and you're going to have to fight a restaurant acquisition battle on the B2B side, and both of those are plenty hard, so why do both?
The reason why we build B2B first, because we watch out for our investors. We look at our project as a lean startup, because we love that. So we believe that B2C is a new concept, but we believe that it's the answer to the question that hasn't been answered yet in the industry. So we're gonna recycle the 15,000 orders we're delivering right now. What we're going to do is very simple. Put a flyer about our ordering platform in every single delivery bags we're delivering for right now. And so basically constantly we're reaching our end user.
Do you worry about margin pressure from the Uber Rush, Postmates, etc. universe?
So you'll be happy to know that we've acquired a lot of the restaurants. They were actually pre-sold to a lot of our competitors, and we're actually getting a lot of traction from them because they're actually sold on the fact that, oh, we should outsource their delivery. But they realize that it's not cost effective because for them, cost is very important because all those platforms are taking too much. So we're actually more cost effective, plus we're more reliable. And that's why we win that battle.
Sorry, this is my last question. I'm just curious about this one. I'm getting cut off over here, I'll go quick. Oh gosh, I'm fired, I quit. Is your B2B solution, so I know Homer's has a inventory management tool and it ties into Seamless and Grubhub and all the other consumer-facing apps. Do you guys have a similar SaaS service for the restaurants?
SaaS service.
Yes, we have the integration with the Seamless and Grubhub as well. So.
And you offer that for free to the restaurants?
Yes.
Cool. Thank you.
I actually want to point out one thing, and I want to. I want to mention about our ordering app and how intuitive that should be and personal as well. Imagine that if you get sick tomorrow, and I don't want to, but what if tomorrow you got sick? Imagine yourself. Can you go to Seamless and Grubhub or any ordering platform right now and put sickness in there, and to see what they can suggest you? Because our app, they can actually be very intuitive and then to serve your personal needs based on your lifestyle or your needs or even by your mood. Thank you.
Thank you.
Okay, let's give it up for Orderhood. And I want to thank also, the theme today has been food. I want to thank our food sponsor, Gorilla. They've been serving some great food, so let's give a hand for the great generous sponsorship of food from Korea in partnership with Kotra. And then along with the great weather from LA, we also brought some Korean love, K-food love. So we brought Cloud Beer. Lotte Beverages sponsored us with all this. So the team in LA actually arranged for this beer to be available today, and so Cloud or Lotte Beverages is sponsoring and providing the complimentary booze. And I did mention. Oh, by the way, I was asked to do this. So the startups that presented today will get this lovely poster of Chun Ji-young, and any of the judges also that would like one will get one as well. So we want to thank Cloud for their sponsorship. Also, Tepero, right? Yeah. And then lastly, Snack Fever, and for those of you that weren't here initially, Snack Fever and Lotte are providing this Tepero to everyone that attended here. Thank you very much, and I'll let Sang wrap it up.
So really, just a big shout out and thank you to all the judges, the panelists, the startups. And we really hope at KSE that these types of events can really bring together not just the Korean American community and startups, but generally all founders, so that we can really learn from each other and make cool new things. Another thank you to Strong Ventures, KOLABS, BAM Ventures for being our co-host for this event. Keep posted. KSE is going to keep doing new stuff, and we're going to take credit for that investment that Strong Ventures made in Palate. Okay, so KSE is going to take credit for that. Stick around. We just opened a new keg, so yeah, give it to. So stick around. There's more beer at the keg, and I think there's some beers floating around as well. And hope to meet a lot of you later on as well. Thank you so much.